Is Canada finally seeing some relief on the inflation front? Let's delve into this intriguing development. In February of 2024, Statistics Canada reported a national inflation rate of 2.8%. Why is this significant, you may ask? Well, this is the first time in 3 years that inflation has fallen within the Bank of Canada's target range of 1 to 3%. Quite a notable achievement, wouldn't you agree? What makes this even more interesting is the unexpected nature of this dip. Yes, you heard it right. Many economists had their money on a higher figure. So this lower inflation rate came as a surprise, leaving them scratching their heads in bewilderment. This unexpected dip in the inflation rate has left many pondering on the reasons behind this slackening. So, what are the factors contributing to this decline in inflation, you might ask? Well, a few key elements have played significant roles in this downturn. First off, we've seen a noticeable drop in the cost of cellular and internet services. This decrease has had a direct impact on the overall inflation rate, helping to bring it down. Next, the pace of growth in grocery price inflation has slowed down. This slower increase in food prices has also helped to ease the overall inflation rate. Now, let's not forget the global context. Moderating global inflation trends are likely to have had an indirect influence on Canada's numbers. With inflation slowing in many parts of the world, it's not surprising to see a similar trend here in Canada. These factors have collectively contributed to the easing inflation. But what does it mean for Canadians? The slowdown in inflation brings with it a multitude of implications. Consumers who've been grappling with climbing prices for essentials can breathe a sigh of relief as this slowdown suggests a more manageable cost of living. But it's not just the consumers who are affected. The Bank of Canada, which keeps a keen eye on inflation when setting interest rates, might reconsider further interest rate hikes. This could be a boon for borrowers, although the bank will certainly weigh other economic factors in its decision. However, let's not start the celebration just yet. A single month's data doesn't necessarily forecast a lasting decline in inflation. Ongoing global events and supply chain disruptions could still place upward pressure on prices, causing a ripple effect on Canada's inflation rate. Looking ahead, the economic landscape remains somewhat uncertain. Global oil prices and the ongoing war in Ukraine are just a couple of the factors that could influence Canada's economy and, by extension, its inflation rate. While this slowdown in inflation offers a glimmer of hope, it's crucial for Canadians to stay aware of ongoing economic developments.